Governments love to claim they're fighting for your financial freedom. They talk about stability, prosperity, and endless opportunity. But history tells a different story, one that's far less flattering. For as long as nations have existed, those in power have used clever financial tricks to drain the public's wealth and tighten their own grip on control. And here's the twist: none of this is new. The same old schemes just keep coming back, dressed in modern language and fancy economic terms. Different names, same goal: move the wealth upward and keep the majority struggling at the bottom. The oldest and simplest trick: inflation. When governments spend more than they collect in taxes, they face two paths. One is to be honest and raise taxes, a move that can destroy their popularity. The other, far easier option, is to quietly weaken the currency, making every coin and note worth a little less each year. The Romans turned this into an art form. By the 3rd century, their emperors, desperate to fund endless wars, began cutting the silver content in their coins. The denarius, once almost pure silver, became mostly copper with a thin silver coating. On the surface, it looked the same, but its real value had collapsed. People paid the price. Prices shot up, savings vanished, and wages couldn't keep pace. It was a hidden tax on everyone, a silent theft that lives on today, only now it's carried out not by emperors, but by central banks. During the Middle Ages, this scheme took on a new form: forced loans. Kings across England, France, and Spain regularly pressured rich merchants and guilds to lend money to the crown. Of course, these loans weren't optional. Saying no could mean heavy fines, losing property, or even worse. The monarchy often promised repayment with interest, but those promises were broken more often than kept. Payments arrived late, in worthless money, or not at all. While rulers funded their wars and luxury courts, the merchants had no real choice but to hand over their wealth. It was coercion cleverly dressed as patriotism, and it worked for hundreds of years. By the 17th century, the trick had evolved into the system itself. When Britain founded the Bank of England in 1694, it wasn't an act of goodwill, it was a way to raise funds for wars against France. Wealthy elites bought government bonds, and in exchange, the crown paid them interest, money that came directly from taxes. On the surface, it looked fair, but the burden fell on ordinary people through taxes on daily goods like salt, beer, and fabric. The rich lent money and earned guaranteed profits, the poor unknowingly paid for those profits. It was a wealth funnel disguised as national finance. And the structure never disappeared. Even today, the safest investments in the world are loans to governments, secured by the hard work and spending of the general public. Jump to the modern era, and these tricks are still everywhere. Look at deficit spending. Governments pile up huge debts by selling bonds to investors, banks, and even other nations. They tell the people it's for infrastructure, new jobs, or social welfare. But a big share of that money ends up in the pockets of defense companies, big corporations, and bailout programs. When the bill comes due, they don't trim elite spending, they raise taxes, let inflation rise, or cut public services. The illusion is that the debt serves the people, but in reality, the people carry the weight while the profits flow upward to the bondholders. And then came the bailouts. During the 2008 financial crisis, major banks gambled with risky mortgages, bundled them into complex securities, and nearly crashed the entire global economy. Who picked up the tab? Ordinary taxpayers, through massive rescue packages. And who walked away richer? The very same banks that caused the disaster, now even bigger and more powerful. It was the oldest trick in the book: privatize the profits, socialize the losses. And the public was told it was all to save the system. Even the way governments manage pensions and retirement funds is a clever illusion. For decades, people in places like the United States, Britain, and across Europe have contributed to state-run systems, trusting that their money would be there when they retired. But in reality, much of it is spent right away, replaced only with promises that future taxpayers will cover it. It's essentially a generational Ponzi scheme dressed in official language. It works, until population changes, aging, and economic pressures make the system unsustainable. Then the government steps into reform hit, often by cutting benefits, raising the retirement age, or letting inflation erode payouts. Look closely at the pattern. Every step relies on perception. Inflation is called growth, forced loans are called duty, national debt is called investment, bailouts are called stability, and pension cuts are called reform. The words used hide the truth. Wealth is moving from the many to the few, from the bottom to the top. History shows this trick has succeeded for centuries because most people never study economic history, fail to understand financial systems, and only realize the trap when it's too late. In recent years, these schemes have grown even more sophisticated. Take quantitative easing, a term unfamiliar to most before the 2008 crisis. Central banks created trillions of dollars out of nowhere, buying government bonds and mortgage-backed securities to stabilize markets. Politicians and bankers assured the public it was necessary to prevent collapse. And it did, but mainly for the financial system. Asset prices soared. Stocks, real estate, and bonds jumped in value. Yet who owns the bulk of these assets? The wealthy. For the average household without major investments, the gains were small, while the costs showed up in inflated markets and higher living expenses. The key trick here is that creating money protected the wealthy and the system at the top, while everyone else faced rising inflation and growing inequality. Another modern sleight of hand is hidden taxation. Rather than increasing income taxes openly, governments quietly collect money through sales taxes, fuel duties, and, most significantly, inflation. When prices climb faster than wages, the difference acts as a hidden tax on savings and purchasing power. Inflation benefits governments by reducing the real value of their debts, but for ordinary people, it slowly eats away at financial freedom. You might feel richer because your paycheck looks bigger on paper, but if costs rise faster than earnings, you are actually losing money. This isn't a flaw in the system, it's part of the system. Inflation isn't just an economic accident, it's one of the most reliable tools governments use to shift the cost of their spending onto the public without ever admitting it. Next comes regulatory capture. On the surface, regulations are meant to safeguard the public, from financial rules to safety standards and consumer protections. Yet history repeatedly shows that powerful industries shape the very regulators supposed to oversee them. Railroads in the 1800s, oil giants in the 1900s, and tech and finance today have all bent the rules in their favor. It's the same lesson the Peaky Blinders learned on the streets of Birmingham: it's easier to control the referee than to fight the game. Governments use regulations to appear protective, but behind the scenes, major corporations create loopholes that limit competition and maximize profits. The public sees protection. The insiders see opportunity. Another age-old trick in modern form is war finance. During both world wars, governments issued massive bonds, presenting them as a patriotic duty for citizens to buy. People believed they were supporting their country, and in a sense, they were. But those bonds also turned into safe, highly profitable investments for the wealthy, backed by future taxes. The same pattern persists today. Trillions spent on wars in Iraq and Afghanistan were funded through debt, enriching defense contractors, banks, and bondholders, while regular taxpayers carried the cost. The trick is that wars are always framed as short-term emergencies, yet the financial consequences last for generations, long after the soldiers return home. Governments also turn complexity itself into a tool. Tax codes hundreds or even thousands of pages long, financial instruments so convoluted even experts struggle to explain them, budgets stuffed with hidden line items and confusing jargon. All of it makes it nearly impossible for ordinary citizens to track where the money really goes. Complexity acts as a disguise. When you can't see the flow of wealth, you can't fight it. In ancient Rome, the debased coins made the scheme visible. Today, it's hidden in balance sheets filled with acronyms and obscure programs. The principle is the same: make it too complicated for the public to follow, and the wealth transfer happens unnoticed. Why does this matter now? Because these tricks are still active, and speeding up. Inflation chips away at savings. Debt keeps piling up year after year. Bailouts remain the default whenever markets falter. Central banks control the money supply, while governments shift costs onto the public in ways most people never notice. The outcome is a system designed to make you work harder for less real wealth, while the financial elite grow richer and stronger. History shows this pattern repeats. When Rome debased its coins, citizens suffered. When monarchs imposed forced loans, merchants lost fortunes. When modern states inflate and borrow, ordinary households bear the cost. Different eras, same mechanism. And the bitter truth: most people will never escape these schemes, simply because they don't even realize they're being played. People accept inflation as normal, taxes as unavoidable, and bailouts as acts of kindness. They trust government narratives instead of learning from economic history. And that ignorance is the greatest trick of all. When the past is forgotten, its lessons can't be recognized, and the cycle repeats. That's why governments and elites prefer a public uneducated in finance. Financial knowledge is power. Understanding economic history is a weapon. If you know the tricks, it's much harder to be manipulated. So what should you take away? First, always look beyond the headlines. When governments announce stimulus, ask who benefits first. When inflation rises, remember it's not just bad luck, it's policy. When new regulations appear, ask who wrote them and who profits. Second, build real wealth outside these traps, assets that retain value even when currency loses it. Third, never assume the system works for you just because it tells you it does. Systems exist to protect themselves, not you. History may not repeat word for word, but if you fail to understand it, it will destroy you just the same. The same financial tricks that kept Roman citizens poor are the ones draining your account today, only hidden behind modern language and digital screens. The difference between the trapped and the free is awareness. If this opened your eyes, hit subscribe. History has the answers, and I'll show you where to find them.